So, welcome to Echotraders. My name is Dale Elliott, and we're in the open house on March 1st, 2016, and it's just before 9 a.m. We're looking for this year market to reach down and grab 16,578, and this is your mini Dow, or otherwise known as your YM instrument futures. Okay, so MACD indicates look for the resistance. We know where resistance is and we know where support is, and we'll see if we can get to a money off target to the downside, and we'll see how much farther it goes from there. We're looking for long targets a little bit later this morning and maybe early afternoon. We'll see when we get those. Okay, it is now quarter after 9. The market is slowly edging toward the target of 16,578. It's not quite there yet. We're looking for stabilization here for the support to move up. You can see resistance is moving down the hill. Support is moving up. One of them has to give way to the other. It's like a giant tug of war, and we look for that to take place in the near future. We want to see 16,578 reached as a target to put some of that money in your pocket from resistance to a support target or partway to a support target. So you're going to look left, you see the S and R here, and if the market comes all the way down there and retests that 100, that's fine. If it comes even farther down to 16,497, putting some of your money that you made this morning in your pocket at 16,578, in hindsight, wouldn't have been a bad idea to put some of it in there. Okay, so we'll come back and keep you abreast. So the market has come down to our money off at 16,578 and then whipsawed back to our entry area. So if you took the money off there, or if you put the money back on at the entry area, you'd have done quite well in both for instances. It depends on the individual how you traded that. Now, support and resistance, we had mentioned our lime green area here, and we'll just pull this here guy right across. Whoop, hang on one sec. So we wanted to see support come in and hold to go to longer targets to the upside. This here's your 30-minute chart on the left-hand side of your screen, and right-hand side, the money off to the downside. And a little bit farther, it went about 21 ticks, so about $110 beyond the money off target. And so now we can get our long positions to take place, and that's from your 16,578. Market's ready to go. We trade that. No, thanks for asking. It is not a default MACD. This year MACD, we have tweaked it just a little bit. So if you're looking at your regular MACD with the 26, what is it, 12, 26, and 9 settings, we have changed this year so that we've minimized the fake outs. Yes, ZB, thank you. I'm coming to that. So thanks for asking that question. So I guess the plain and simple, it's no, it's not a regular MACD. Thanks for asking the question. Okay, and you can get those settings from us at a later time. Okay. Where are we going? We had suggested that we would look at long targets, and our money off target up here is 16,642. It was not reached earlier. We look for that and beyond. Now let's see if the market can get up there right now. It's almost there. Here we go. Just like that. 16,644. Okay, very good so far. And I think we showed you the targets even beyond that. So we love to see support and resistance act as it's supposed to. You see support is on the rise. Let's move to here. And now here. If I can get that darn little thing up here. There we go. So support's on the rise. Our long targets are well into development stage. We're not chasing the candles. So if you traded short, you had to put the money in your pocket, or you've just given back everything you made. These are mistakes that we want to avoid. Okay, so far so good on that trade, and you're going to lock in your profits. You've already minimized your risk, and you hang on to your next target if you can. So the market has come to our, let me zoom in on this. Here we go. So this here target at 16,642. The market came up and slightly above. Okay. So it had a total of 16,648. Whoops. All right. So I put the crosshairs on where that candle ended, and we'll look for this here market to trade from support, right? So you look left and you find that support and resistance. And just move this guy over a little bit. And now that support has kicked in and followed through, and that holds as support. Now we'll want to see the market retest this area, and even the 23 is fine, and find support to trade to beyond this year money off to the upside. All right. So if you take money off, part of your position off there, you have done very, very well. And that's what Dave was talking about, getting into the pecking order. Okay. So the pecking order, very, very, very important to put some of the position in your pocket. Earlier today, we had talked about the larger time frame, indicating that we wanted to look for larger targets or longer targets to the upside. And in the meantime, if the pullback that we were looking for was worthy, that we would or could trade part of that. So we're going to do just a quick little recap of that, and I'll use the ellipse to do so. Now, some of you may find this here very interesting, and some of you will get it as we go. Okay, so we had a target of 16,642, and it was not reached, and the market put in this here double top. All right, so 16,642 is from your larger time frame. All right, so from the double top, The market traded down, gave us an indication that it would be willing to trade below. So we have a target to the downside. Now you don't have to trade in both directions. All right, that's very important. So when the market traded from resistance to support, we look for the market to retest resistance. Okay, so we had mentioned that our targets would be long later this morning. Now it is 11 o'clock now, so this is pretty good as far as all that coming together in a reasonable time period. Now some of you have been here for 3 hours, right? And we only have time to show so many instruments, but we'll do our best, okay? So for instance, we know that this was resistance and we were asked to look for it, right? And we also know that the next spot up is resistance. And as resistance gets punished or broken to the upside, you would want to be trading long. Now, let's go to your 30-minute chart. Okay, so here we go. We put the inset 30-minute or larger time frame on the left here, and this here little double top that we drew here, right? And we have this here little double top over here. So if I make this here blue, this here will be able to, and I'll put it on top of the other. Maybe brown would be a little better. And I'm just going to attach it to the other chart so you can see one double top overlay on the other one. Let me put that over there. I'll click apply. All right, you see it apply over here. All right. So that double top was temporary resistance or a reason to trade short. Pretty clean in hindsight, isn't it? So can you trade that short? Yes, we proved that you can trade it short and have a Fibonacci for a nice target area. So if you have targets, this makes it easier to not only trade, but to anticipate the trade or the pullback for your setup. And we'll go into that at another time. Whoop, apply. And doesn't want to apply. Whoops, I see why. All right, let's go apply. Okay, so a nice target to do what? Take some money. Trading in the opposite direction. Now that the synchronization or synchronicity to the upside looking for from support, it becomes quite a nice trade. Whoops, I get this here. It becomes quite a nice trade from here to this resistance. Huh? From the market traded from resistance in blue here on your chart. I'll put an A on the crosshair. From here, the market traded to support. Once you realize where support is, and you're going to look left to often find that, the market traded from support back through resistance to greater resistance, and once it got there, it stumbled once again. This is to be expected. Okay. So till next time, trade well, my friends. And that's about it.